Hello everyone, hello Miss Viska and friends. Now we are from Group 1. We are going to present about the revenue recognition presentation. Hello everyone, here are the contents of our presentation. We are going to answer the two questions assigned for us Group 1. Here,
Question 1. What is revenue based on Conceptual Framework and PSAK 72? Explain the general criteria for revenue recognition and revenue recognition principles.
Next, I'm going to talk about revenue based on conceptual framework. Based on AASB 118, revenue is the gross inflow of economic benefits during the period arising in the course of the ordinary activities of an entity when these inflows result in increases in equity, other than increases relating to contribution from equity participants. And based on paragraph 70A and 74 of the framework, income is increases in economic benefits during the accounting period in the form of inflows or enhancement of assets or decreases of liabilities that results in increases in equity. This definition of income encompasses both revenue and gains, and revenue is referred to by a variety of different names, including sales, fee, interest, dividends, royalties, and rent.
Next one is revenue based on PSAK 72. PSAK 72 is adapted from IFRS 15, which is revenue from contracts with customer. There are three key definitions of PSAK 72. The first one is contract. Contract is an agreement between two or more parties that creates enforceable rights and obligations. The second one is income. Income is increases in economic benefit during the accounting period in the form inflow or enhancement of asset or decrease of liabilities that result in an increase in equity other than those relating to contribution from equity participants. And the third is revenue. Revenue is income arising in the course of entities' ordinary activities. The objective of the revenue standard is to provide a single comprehensive revenue recognition model for all contracts with customers to improve comparability within industries, across industries, and across capital markets. Revenue has been recognized at several points in the earning cycle. For example, at point 5, progressively throughout production; at point 7, receipt of orders after completing production; at point 8, delivery of goods to customer; and at point 9, receipt of cash. We need to formulate criteria to help us decide what is the sufficient objective evidence. Over the years, based on the need for objective evidence, three criteria have evolved to ascertain whether revenue or gain should be recognized. I will explain the three general criteria for revenue recognition on the next slide. So, there are three general criteria for revenue recognition. First, measurability of asset value. Second, existence of a transaction. Third, substantial completion of the earning process. First, measurability of asset value. Revenue can be viewed as an inflow that increases the value of the total asset of the firm with a concurrent increase in equity. If there is no inflow of asset value that can be objectively determined, revenue cannot be calculated objectively. The FASB states that revenue and gains are generally not recognized until realized and realizable. The term realized means that the asset received is cash or claims to cash, and realizable means that the asset received is readily convertible to known amounts of cash or claims to cash. Readily convertible assets have interchangeable units and available quoted price in an active market. Recognition requires an inflow of assets or measurable change in the value of asset, whereas realization requires an inflow of liquid asset. And the next one, an aspect of the criterion of measurability is whether collectibility of the cash is reasonably assured. Measurability of asset value relates to their collectibility. Collectibility is a matter of judgment, usually based on the previous experience of the firm. The longer the collection period, the more uncertain it is that all cash will be collected. Determining collectibility is a matter of resolving the uncertainty associated with the realization of the revenue.
The second one is the existence of a transaction. When an external party in an arm's length transaction expresses willingness to pay a given price for the firm's product, the transaction constitutes objective evidence of an increase in value in the firm. The outside party provides corroboration of the value of the output. Presently, except in specified cases, the firm must be a direct participant in the transaction for the revenue to be recognized. If we insist on the firm being a party of the transactions before revenue can be recognized, the historical cost becomes the most visible basis for asset valuation. The other argument said that the firm doesn't need to be a party of the transaction, but that a market transaction in general is sufficient. Therefore, asset can be revalued and a gain cannot be recorded before the sale. The last criteria is substantial completion of earning process. It focuses on the notion that revenue is not generated until the firm has performed most of the activities for which the firm earns revenue. For this criterion to be applicable, revenue is not regarded as having been earned until the firm has done something. When most of the operations that constitute the earning process have been undertaken by the firm, the costs associated with those operations can also be determined. This criteria will be explained further in question 2. The next one is revenue recognition principle. We should recognize revenue in the accounting period when the performance obligation is satisfied. The next
Now for question number 2, what is meant by substantial completion of the earning process? What is the significance of this criterion? Provide example revenue recognition based on this criterion. Substantial completion of the earning process focuses on the notion that revenue is not generated or earned until the firm has performed most of the activities for which the firm earns revenue. So, this criterion means that revenue is not regarded as having been earned until the firm has done something. There are several significances of this criterion. First, the operation costs can be easily determined because most of the operations that were part of the earning process have been undertaken. Second, the total costs can be ascertained with little uncertainty because whatever future costs there may be can be easily estimated. And lastly, more objective determination of costs.
However, there are subjective difficulties that are associated with the completion of earning process tests, which the revenue may result from a number of activities from production to sale to collection, and the revenue is in reality a continuous process, and the problem of selecting the critical point which earning is considered to be accomplished. This critical point is categorized as another criterion, which is the critical event, because we need to select the critical event or critical point in which earning is accomplished. The critical event criterion is the profit is earned at the moment of making the most critical decision or of performing the most difficult task in the cycle of complete transaction. However, before we are going to talk about the example of revenue recognition based on substantive completion of the earning process criterion, I'd like to tell you guys the two conditions of substantive completion of the earning process, which the conditions can be determined as first, the earning process is complete or virtually complete, and second, an exchange has taken place. Below is the example of the revenue recognition based on the two conditions, which I choose the sales of products. When the sales of products are involved, the condition, which the second condition, an exchange has taken place, is met at the date of sale, usually interpreted to mean the date of the delivery to the customers, because it is clear that when the seller already gives the products to the customer, there is an exchange of product, and so the exchange of product has taken place. So, thus, the seller generalizes the sales revenue only when the products already arrived at the customer. The first condition, which the earning process is complete or virtually complete, is also met at the date of the sale, which when the seller has performed his or her obligation to give the products which the customer buys to the customer. So both the condition is met at the date of sale, which is the date of delivery to customers. Uh, that is the example of the revenue recognition based on substantive completion of the earning process criteria.
So the next questions we're gonna answer is make an analysis on Garuda case based on conceptual framework and PSAK 72. So this is the case overview for Garuda Indonesia and Mahata Aerotechnology. So on October 2018, Garuda Indonesia made a contract with Mahatma Aerotechnology to provide in-flight connectivity and entertainment on Garuda Indonesia's aircraft. And on April 2019, two of Garuda Indonesia's commissioners refused to sign Garuda Indonesia's 2018 annual report because they think that it is not in accordance of the proper PSAK, which is PSAK 72. And after a long investigation, on June 28, 2019, OJK finally established sanctions for Garuda Indonesia. So the sanctions faced by Garuda Indonesia is first, they must restate their annual report for the year 2018 and conduct public exposure no later than 14 days after the sanctions have been given. And the second is impose administrative sanction of 100 million rupiah for PT Garuda Indonesia for violating OJK Regulation Number 29 POJK for year 2016. And the third is impose administrative sanction in the form of fines of 100 million rupiah to each member of Garuda Indonesia's board of directors. And the fourth is impose administrative sanction in the form of fines of 100 million rupiah jointly for each member of Garuda Indonesia's board of directors and commissioners that have already signed the annual report. And the fifth is freezing the license of the auditor that conducted the audit for Garuda Indonesia's annual report for 12 months and give written order for the public accounting firm to make improvement to quality control policies and procedures. On October 2018, Garuda Indonesia and Mahata Aerotechnology entered a cooperation agreement. Mahata will provide Garuda with in-flight connectivity and in-flight entertainment services and pay for all the maintenance fee. Mahata will also pay for the right to install these services on Garuda Indonesia's aircraft. This contract is valued at 239 million US dollar and will be valid for the next 15 years.
There are 5 steps model of the revenue recognition in PSAK 72, which is the first step is to identify the contract, the second step is to identify the obligation of each parties in the contract, the third step is to determine the price for the transaction, the fourth step is to allocate the transaction price to the obligation of each parties, and the fifth step is to recognize the revenue when each performance obligation has been satisfied, whether it has been satisfied over time or whether the performance obligation is satisfied at a point in time. According to paragraph 31 of PSAK 72, an entity will only recognize revenue when the entity fulfills performance obligations by transferring promised goods or services to its customers. Assets are transferred when the customer gains control of the asset. In light of the contract that has been made between Garuda and Mahata, we understand that the contract is valid for 15 years. Hence, in accordance to our group's conclusion and analysis, Garuda cannot acknowledge the compensation from Mahata as its revenue, which is as much as 211,940,000 US dollars, as it has not fulfilled its performance obligation to rent its aircrafts for 15 years. This will be the end of our group's presentation. Thank you for paying attention to our presentation. Is there any questions that any one of you would like to ask to our group?